Good afternoon, everybody. We will make a start. Welcome to the 2025 Annual Investor Meeting for the Awatea Forest Fund. As I previously mentioned, my name is Will Dickey, the Director of Roger Dickey New Zealand Limited and who is the manager of the Awatea Fund. Before we get underway and further introductions, I just want to confirm that under Section 162D of the FMCA, covenants appointed me to chair the meeting. So we'll do that. And then by way of introductions, I have Jeff Dickey from Roger Dickey New Zealand Limited with me here, a director, Matt Harvey from our Roger Dickey New Zealand Limited office. We also have Rory Benison from FMNZ, Forest Management New Zealand, the operations team. And from Moore Markhams, we have Jeff and Lucan, who I think you can see on screen. As well, we have Eleanor and some representatives from Covenant joining us here today. So we've got a bit of a presentation to take you through. Maddie, Dan, you're going to put that up. Just by way of housekeeping, the meeting has been recorded. The recording definitely be made available afterwards as well. The presentation, copies of that will be distributed with the minutes of the meeting. There's a question and answer section. Later in the meeting, and at any time during the meeting, you're welcome to type questions, and we'll endeavour to get an answer to them as we go through. The minutes from the previous meeting are available on the Roger Dickey Investor Portal, and hard copies of those minutes have been provided to investors who have elected to receive these by post. And by one final piece of housekeeping, I can confirm that under Section 30.3 of the Trust Deed, we're required to have 10% of the unit and fund holders for a quorum, and we have registered attendees of 20.01% and proxies aligned with that, so I can declare the meeting open. In terms of meeting structure, so we'll come through a bit of an overview of the fund and a year in review. Then we'll pass across to the forest managers for some operational updates. Jeff and Lucan will take us through the financial results of the AFF. We'll have a market update from the timber perspective and on carbon, an outlook to the future, and then welcoming any questions and answers from investors that have joined us here today. So I guess now I'll pass you on to Jeff Dickey, Director at Roger Dickey New Zealand.
Hi, good afternoon all. Jeff Dickey here. Just in terms of what's in front of you there, this is just meant as an overview of what the fund has been up to. As you can see there, 2,224 effective hectares owned by the fund presently, down ever so slightly on last year, but that is to do with the sale of Airstrip and recent acquisition of Northbrook. The fund encompasses now 2,938 gross hectares. In terms of the returns, we've been very pleased with how the fund has performed. We've had a unit price increase of $1.25 to $1.37.7 across that financial year to 31 March 2025, which equates to a 10.1% return in that financial year. And the fund was sitting on 11.2% in terms of average annualised returns since inception. In terms of probably another point to make there, loan-to-value ratio had increased slightly for the year. That was to do with the acquisition of Tainui while we made available for sale the Airstrip forests and the arbitrage that a number of you will be aware of, and some of you increased your ownership over that period. We do expect now that the LVR since the completion of last year has reduced to around about 30%, subject to updated valuations. Just jump forward. Just in terms of year in review, in terms of capital raising, this is certainly a focus going forward. The capital raise for the year 31 March 25 issued 3.141 million extra or additional new units. I've already discussed the unit price. In terms of operational activities, you recall we contracted for sale the airstrip forest. We have also contracted for sale a number of the lots which have been subdivided along with the airstrip forest. We acquired the Tainui property and also planted part of that property along with Kinloch and Ngātoka forests throughout that year. In terms of what's been happening since last financial year, we've actually now settled the airstrip forest. We have settled 4 out of the 7 additional lots, have a 5th lot under contract at airstrip and 2 more being actively marketed. We are also continuing on with the subdivisions at Tainui and have commenced recently subdivision for Northbrook Forest. You'll note we commenced distributions also since the turn of the financial year. That's equated to a 5% of unit value distribution, which was net of tax. And as an interesting fact, around 30% of investors opted to reinvest under the distribution reinvestment plan. We've acquired Northbrook very recently. Reason for acquiring that is it was an obvious high quality property in the Tūtera region, just 50 kilometres from port, with good rainfall, good contour, and also good aggregate, including a registered or consented quarry on site. We have gone and planted that forest. I think Rory will probably speak to the plantings there, but we have opted for some native, some manuka and redwoods along with pine. So a good diversification coming in there.
Are you going to?
Yeah, just we provided a copy of this table last year. I think it's just interesting to highlight in terms of the properties and some of the points that we look at or the factors of properties that we look at when acquiring, most notably distance to port, the acquisition price on a per effective hectare. And we also look at when we're buying these carbon eligible forests, what the net present value is of a carbon credit. So effectively there, the average across the properties held by the fund, that net present value of carbon is $24. So that is to say that we are acquiring carbon credits in today's money at $24 based on the forward outlook of those properties. And that compares with a market price today around $58. I'll just hand on quickly to Rory to give us a quick rundown on what's been happening, how forest health is looking in the forests and planting of late.
Okay, thanks, Jeff. So just over the past 12 months, the weather systems were fairly normal for the regions the fund sits within. We did see in some regions, particularly the Wairarapa, some very strong winds late April and May, and some forests in Hawke's Bay. But from our inspections, there was only minor works required, which is a pleasing result of about 15 hectares in one of the partnerships there. To put that into context, approximately 600 hectares of toppling work was required in other forests. So it's a pleasing result to see that and how they've fared. So this winter, we managed to plant and start on time, thanks to just some good regular rainfall and good soil moisture levels in the property, establishing 668,000 seedlings across 717 hectares. Of that, a large proportion is still radiata, 597,000, but as Jeff mentioned earlier, we've done some redwood plantings at Northbrook of about 14,100 in some areas or land that would be unsuitable for harvesting, so they'll be for a longer term species, and also a good portion of mixed natives, in total of 57,375, primarily Manuka and Kānuka. So that was at the Tainui and Northbrook properties. And blanking was also, or infill planting was carried out at Kinloch, Ngātoka and Tainui, and that just helps to lift the stocking levels back up to those initial planting rates that we had established at, which is 833 stems per hectare. At the moment, pest control is ongoing with most attention turned to the new Northbrook properties to help those seedlings get through. And a highlight from what we've seen is, I guess, the vision of the fund in terms of their commitment to the riparian plantings, especially at Northbrook and Tainui. Those were planted in the native species, and we see that as a positive step forward in terms of that fund's commitment to how land is managed and planted, and while also keeping a strong focus on carbon sequestration rates. Work is underway to have those ETS applications for the land planted this year submitted within the next month, so they can claim credits from next year. But overall, from our assessments, the forests are doing well and high quality, and will produce excellent forests going forward.
That's good. Thank you very much, Rory. We'll now pass on to Jeff Whitlock and Lucan at Moore Markhams for a review of the financial results.
Yep. Hey guys. As you can see, just looking at, I guess, the profit and loss of the fund, minor income, or minor real income, really, not expected much anyway. I guess the big points really around expenses. To obviously run the fund, there was a slight increase in that. That's the majority of that is the management of the forests, as well as the administration and management fees to run the fund in line with the deed. Interest expense was up quite a bit due to the increase in the lending by the bank. And if you work a bit down, there was a slight increase in the value of the NZUs. They were up 219,000. The big movement was the valuations of the land. Quite a big increase during the year of 6.4 million. So after all that, an increase in the fund via that of just over $4 million worth. If you go into the statement of changes in equity, that flows through into there via the asset revaluation reserve, NZU revaluation reserve, and retained earnings. There was also increases via investor contributions of $2.9 million, and also refunds via the IRD from the PI refunds due to the losses incurred by the fund during the year. This has brought the total equity financial reporting standards of the fund up to $29,378,000. Going on from there, you look at the balance sheet, and as you can see, the increases really are around the values in the land. It's distinguished quite differently this year. $8.4 million is actually classified as current. That's due to the sale of the airstrip, or the pending sale of the airstrip at the time. So slightly different way it's valued. That's why it had to be separated out from the rest of the land. Forestry up just under 700,000 for the year to 3.9 million. And as touched on before, the bank loans have increased 11.3 million up to 16.5. And you'll see there as well, deposits held at $2.5 million, which was received for the airstrip sale. And that's it really.
Perfect. Thank you, Luke. And I'm sure we might have some questions in the section at the end there. So as we move on, I'll just take a look at the markets here. Just go to the next slide, please, Dan. So log prices have followed pretty historical trends. As seen on the graph here, we build up into the Chinese New Year, relatively flat and then dropping away. In general, the trend has been a little bit more stability there, stability across the year. In our domestic market, in general terms, we've still seen sawmills struggling on the back of reduced demand, which is ultimately through harvesting consents. And that's resulted in some of the processes or some of our mills with older technology and equipment have closed or consolidated their operations. And equally on the other side, we've had some mills, the Dukin Mill in Gisborne has sold to an Australian company who are looking to re-establish that mill and increase capacity. The government's also continuing with its forestry and wood processing information transformation plan, FWP ITW plan, which aims to strengthen the processing sector and get more wood fibre processed onshore. The focus to date is largely in that area being regulatory, but we encourage to have them keep going. Next slide, Dan. In the international market, so demand out of China has been relatively flat across the year. Of note there is that the New Zealand market share into China has increased quite a lot over the last couple of years. We're up from 55% to around 75%. And China's kind of continuing to put stimulus into the market and drive those prices hopefully high. And we're starting to see the first steps of that with some of their housing starts. There's continued focus on supply chain efficiencies, so reduced cost of harvest operations as these head into log markets. And we've talked in the past on trade barriers to India starting to reduce. So the stats around India suggest that by 2030, their consumption of logs is going to be up 70% from 2020. And I think year to date or progress to date, been 5 years through that, they're on target to meet that. And finally, I guess in log markets, the World Bank and Gresham House, along with some other think tanks in the sector, are still forecasting consumption of timber to triple by 2050. So all bodes well for sustainable supply of timber into these markets.
Yeah, just moving on to carbon markets, which I guess in terms of financial implications is more upfront and more impactful in the next 15 years than what harvest will be. Of course, the fund is acquiring properties that are well suited to sustainable harvest supply. But by and large, those revenues that are generated by the fund, especially in the first 15 plus years, will come from carbon. Across the financial year to March 25, it was a reasonably volatile year. Some government announcements which pushed it to a low of $44, but rebounded from there. Since that, the market has been more stable to present, $55 to $60 range. I guess we can consider and argue why the price of carbon isn't trading above the $68 price floor that the government imposes. And just so we're aware, the government auctions off 4 allotments of carbon credits quarterly. The first 3 auctions, including an auction just earlier this month, have failed, meaning that no bids have exceeded the price floor. While we can question why that's happening, and we have some answers to that, but I think sort of medium long term, it is widely expected that these auctions will fail and that the 4th auction will fail this year. This will result in those units being taken away from the government stockpile or the government's balance sheet, and will tighten supply going forward. Part of the reason we think that carbon credits are not trading above that price floor is because there is a significant amount of units held by foresters like the Awatea Forest Fund, and some of those units are being sold. Some and quite a lot of leverage is in the carbon market these days, because banks will lend against carbon cash flows. So a lot of units actually have to be sold on an annual basis, and that keeps a little bit of pressure on it in the meantime. In general, the way that it looking forward for carbon is that the government has restricted the amount of units they'll sell in an auction, and therefore, that number of units that they're looking to sell is far less than emitters require on an annual basis. So we're seeing the stockpile reduce, and those latest statistics had that stockpile reducing from around 69 million units to 50 million units. With the auctions expected to fail this year, we expect to see a similar sort of number. And as that continues on, we expect we will then see price tensions. So you can see there, Jardins, who's the largest trading house of carbon credits, they run least cost modelling of the supply of units. They expect to see carbon credits up to $120 by 2035. And we share the view that pricing tensions will increase the price of a carbon credit, although putting a dollar value on it is difficult. In terms of sort of understanding what the carbon credit means to Awatea Forest Fund, the properties that we have planted to date are expected to sequester about 1.2 million saleable carbon credits. If we look at that based on the government price floors, then that is around $100 million worth of carbon to be stored and sold for the fund looking forward, with the majority of that coming over the next 16 years. And in terms of sensitivities to carbon price, if we looked at a $10 linear change of carbon, that would result in approximately a 1.5% change to the 30-year IRR, or internal rate of return. So carbon is important to us, but we hold a positive view looking forward. And probably just recently, an announcement that I'm sure everyone's wondering about is the land use classification announcement, which looks to restrict some of the land that can go into forestry, or can go into the ETS rather. And this looks to restrict land use classification 6 to an amount of 15,000 hectares per year. It's proposed to be run through a balloting system, and just, I guess, so you understand, the majority of land that we afforest is LUC 6 and 7. 7 can freely be registered in the ETS. It's the LUC 6 which comes into question. The limitation of 15,000 hectares we don't see as being a material cap. At the very peak of planting around 3 years ago, there was around 23,000 hectares of LUC 6 afforested, and we think there will be substantially less forested in the next 1 or 2 years while the market gets their head around this. So we're confident of being in the market, acquiring the right properties, and being able to register in the ETS. We have submitted to the government on changes that we think would help. That includes a more qualitative assessment in terms of species. When we look at what we're going to do going forward in terms of establishment of forests, we are probably going to look a bit more closely at redwoods to help fill out the fund. We believe that they should be treated more favourably than pine plantations, and certainly the removal of permanent pine in that. So we wait to see the outcomes, but we're not so worried about how that impacts the fund. We're very confident of managing to acquire those high quality properties that we've already achieved. Just moving on to just the outlook for the fund. We're very pleased with this portfolio approach. It is working, and I think that's evidenced by the returns to date. And as well, we see a very promising outlook there in terms of carbon cash flows. In terms of capital raising, we've mentioned that a big focus here for us now is one on capital raising and filling out the fund, achieving that 5,000 hectares, and as well on the LVR, so making sure that we manage a bank funding. We expect long-term funding to come down below 10% in terms of bank lending, probably closer to zero. We've planned to review in 18 months around capital raise and where the fund's at, but confident that we're headed in the right direction, and you might be seeing more of us in social and other media forums going forward. As just mentioned, that limitation to LUC restrictions, we don't see as having a material impact on the fund. And in terms of the outlook, we've got an accelerating carbon sequestration profile. So we've made a 5% net of tax distribution, and we do expect, based on stable carbon prices, that will increase. And we can probably just jump across to the next slide there. This slide is you will get a soft copy of this, but this here just gives you a high level overview of how revenues and expenditures are expected to occur in the fund. A large amount of those revenues that you can see there are from carbon. And down the very bottom, you can see the anticipated or forecast profile of distributions heading upward of 15% per annum. I think that's probably...
Yeah, thanks, Jeff. So a copy of this, which I guess is a snapshot in time, will be made available with the minutes. Matt, are there any questions that have risen?
Yeah, I've got one question here from Mike. How confident are you that the Northbrook Forest will be able to register in the ETS?
Yeah, I can take that. So I guess the short answer is very confident. We held seedling deposits prior to the December 4 date, and also Awatea Forest Fund being in its capital raising process, has a very strong alignment to planting more forests. So we also study the eligibility of land prior to acquisition to make sure that we understand the areas that will be carbon eligible as post-89 forests. So we are confident that Northbrook, under the new rules, will be able to register in the ETS.
And just on that as well, MPI at the recent carbon conference noted that all applications submitted prior to midnight 30th of October would be assessed under the current rules. So that works, hence why date we're aiming for.
Thanks, Rory.
Thanks, Rory.
There's no more questions.
Right, it doesn't appear that we have any more questions in at this time. You're welcome, if you haven't typed one in, to put them through to us via an email and we'll answer them. And as always, we're an open door here at Roger Dickey, so we welcome any feedback or comments. You can reach out to the office. No, so there's no questions.
No more questions.
Perfect. Well, if that's the case, I'd like to thank everybody for attending the 2025 AGM. As I said, we look forward to receiving any questions afterwards. A copy of this recording will be made available along with the minutes, but thank you very much for your attendance, and we'll see you for the next one.
Meeting closed at 12:31.
Officially declare the meeting closed at 12:31. Thanks, Matt.
Cool. Thank you.
Thank you.
Thanks, everyone.
Thank you. Cheers, guys.